Hi, everyone. I'm Ty from NAV. I'm really happy to be here with you today. And we are really lucky. We get to talk to Eddie DeAngelis. He's the director of lending at NAV, and we're going to talk about real estate financing today. Um, so, Eddie, do you want to maybe just tell us a little bit about yourself before we get started?
Sure. Good afternoon, everyone. My name is Ed DeAngelis, the head of finance here at NAV. I work out of our Pennsylvania office, and I handle our sales team of funding managers here and some employees in Utah. And we handle all of what we call our assisted customers, that where we take a client from start to finish and walk them all the way through the loan process, whether it be for a loan, a line of credit, or any type of business financing that they're looking for.
Most people, if they're like me, they think of real estate financing and it's pretty straightforward. They don't think of it as being as complicated as it is. And there's a bunch of, like for example, I have always considered commercial real estate to be the same thing, whether it was, buying a home to flip or to fix and flip, or whether it was buying a piece of commercial property or whatever. But it's not. It's when you're talking to a lender and you want to talk about real estate financing, there's a couple of terms you need to understand so that you and the lender are both talking about the same thing. So let's start off with that. For example, Eddie, when you hear the word commercial real estate loan, what is it you're thinking about?
That's a great question, Ty. And exactly what you said. Commercial real estate loan can mean a number of things. So it's important to dive in and really understand, number one, what the client's asking about, what the client's looking for, and what type of funding options are out there for businesses. So, in a sense, when you say commercial real estate loan, some may be thinking of, am I a new investor that's looking to, make my first purchase of an investment property that I want to, let's just say, fix and flip. I want to buy a home, get it for a good deal, go in and do all the renovations, fix it up, and then potentially put it on the market and sell it. Fix and flips are typically done within a year term in most cases. And then there's another side, what they call purchase to hold and rent, right? You're going to purchase a place, potentially fix it up, rehab it, and then just hold it and acquire the property and rent those properties out. So when people say commercial real estate loans, that's typically the first thing that comes to mind. But there are so many other options of what commercial real estate loans can mean, right? There may be businesses that are in real estate that they do, they some buy and hold, some buy and sell. They may already own some properties. They may do property maintenance. So there's businesses that are in the real estate industry that are in need of financing, whether it's to buy a new property, whether it's to acquire another property, or whether they're looking to grow their sales office, their real estate office, and they want to do some hiring of more staff. There's numerous reasons that they can be looking for funding. So do we want to talk about additional, some other streams of
Yeah,
capital?
what if you're a small business, Eddie, and you want to buy a property to build a new warehouse on or something like that, and you go into a lender, what do you ask for then?
Yes, that's a great question. So if you're looking to acquire a property for your business, that is what we would do. We would be able to handle that through NAV. It would be the best way typically would be through a commercial mortgage, right? And these are it's one of the most preferred options because it's going to be owner occupied, since the business owner is going to be running his business in that property and in the building. So he's there and present. So a lot of lenders like financing owner occupied properties. Typically, we can do those commercial mortgages. You can do them, there's multiple programs, whether it would be an interest only for a couple years and then, you want to refinance it. But the most common is our 30-year conventional mortgage. Interest rates typically start at about 5.49%. And we can go as far out as 30-year terms on the amortization, which, gives the client a very good low monthly payment. There's also a few other options like balloon, where you can do a 5-year balloon where you refinance, every 5 years, and the interest rate would adjust to the current market.
So it makes a big difference when you're looking for financing for whatever real estate purpose, to make sure that the lender understands exactly what you're talking about so that he can or she can point you in the right direction, right?
Extremely important, yes, to clarify, because there's multiple different products that can be used, and some are better than others. And whatever's the most applicable for your situation is, how you want to be specific on.
Well, with that in mind, everybody, we want to open this up to questions if you have any. Go ahead and fill in your questions on the chat box, and I'll make sure that Eddie takes a minute to answer them, because this is kind of a complicated conversation, and we want to make sure that if any of you have questions, we address them. In the meantime, Eddie, what types of financing can be used to purchase commercial real estate?
So the commercial mortgage is one of the most popular. We also can do refinancing if a business owner has, or even they don't even necessarily have to be a business owner, but if you have an existing commercial or investment property and you want to do a cash out refinance, we also are able to do those on the same type of conventional mortgage terms. Other uses that we've done in the past and that are very popular is we can secure a line of credit for the business. If the business is qualified, just a pretty conventional line of credit product can be used for the down payment to then help secure that mortgage. Typically, when you are looking to acquire a property, most lenders do require approximately a 20 to 25% down payment. So the buyer has some skin in the game and some equity once the mortgage is done. So that's also something that we can help out with like a conventional line of credit.
Are there other options available for real estate if you maybe you don't have a 20% down payment, or you don't necessarily qualify for a traditional commercial real estate loan?
With no money down to get a mortgage done, it's 100% financing. To the best of my knowledge, I don't know if that can be done. There may be some lenders out there that can do 100% financing. They would probably need some type of collateral to back that up, or extremely high credit. But it's really challenging. It seems like most of the mortgages that we come across usually require about 20 to 25% down.
So if you're looking to let's back up to the fix and flip option. If
Mm-hmm.
you're looking to fix and flip property, how does that type of financing work, and where should people look for that type of financing?
That's a great question. So fix and flips, it's an interesting market, right? There's a few different types of fix and flip investors, right? It could be someone like you and I that are, we see the market. It looks like a great market to flip properties, and the retail values are going up. So we're like a brand new investor, like a startup, like we're getting our first property, or we may have done one and now we want to go into our second, like smaller companies like that. They're your most challenging, right? Because they look at that as a startup, right? Most lenders that do get involved in the fix and flip, those real estate loans for fix and flip, they do look to the buyer to be a seasoned investor. So they want to show some type of history where you already maybe own a few properties, or you've already completed a couple of fix and flips. So they are going to look into the history. And, if they're going to lend on a new property that you're looking to purchase, they want to, like anything, they want to see that you're experienced, you know what you're doing, you've already been in the market, you may already have a property. So it is, again, if you're just starting out, it can be a little challenging to secure that type of financing.
What if you're somebody like you're a real estate investor and you own 2 or 3 or 4 or 5 different commercial properties throughout the city, and you have an opportunity to buy another one? It kind of explain how that real estate transaction takes place.
Yes. So in that case, it would be what we would consider a pretty good deal. Because the real estate, the fix and flip part that we're discussing now is a very niche industry, and there are lenders that specialize in that. Which one of them that I know, that's one of a big reputable one that I've worked with in the past, is Alpha Funding, and their website is alphafunding.com. They do all different types of financing for fix and flips, or to acquire a property, whether it be a multi-unit apartment building or just a building, that you're looking to purchase and resell, whether it's a residential home or a commercial property, either or. So they're a really good resource for those type of loans and those types of deals. They would typically, they take into consideration after repair value. They call it ARV. So for example, if a property is in bad shape right now, and let's just say it's currently worth about $200,000, And if we fixed it up and put 50,000 into it, it may be worth 350,000. So if you're a seasoned investor, the lenders that do those types of deals, they specialize in that niche and know each market, and they'll basically lend a specific percentage on that after repair value, because they know what the value of the property is going to be worth after you fix it up and put it on the market. So they'll lend up to like 70 or 75% of that ARV is what they call it, aftermarket, after repair value. So again, that's a niche that we don't necessarily handle here at NAV, but Alpha Funding is a good resource for anyone that wants to look into that.
Let's talk about a little bit. Let's talk a little bit about commercial mortgages. How do they work? Are they different than the mortgage I have on my home? What, if they are, what makes them different? How does that process work?
Great question. With conventional mortgages on homes, you can do, you may know the first-time homeowners, you can sometimes get away with putting down as little as like 3 to 5% as your down payment. As far as the structure and the way they work, they're very similar in the way they work. Like the commercial mortgages that we do, we can go out to a 30-year conventional term. Typically, the interest rates on the commercial side are a few points higher. For example, if you're purchasing a home right now, interest rates are as low as like maybe 3% on the consumer side. But on the business side, the interest rates start for us around 5.49 and all the way up, depending on risk and credit and everything.
Is it hard to qualify for one of these loans? What does that process look like? If I have an opportunity and I think I can make the deal, what type of credit, what type of qualification profile are real
Great
estate
question.
lenders looking for?
The biggest drivers are the property itself, right? They want to see the property. The lender that's going to put a mortgage on a property, they might want to make sure it's, in a neighborhood that, there's no, for example, like if we're 2 blocks away from the wildfires in California, it may be challenging to secure a mortgage there. We had a deal about a month or two ago that the owner had a bike company, a big bike manufacturer, had a really large, nice building, but it was in Detroit, Michigan, where a lot of the rioting and stuff had taken place. And they owned it outright. It was worth about $500,000. They didn't have any mortgage on the property. So you would normally think that that's a perfect, easy deal to do a cash out refinance. The lenders, we had 3 or 4 different lenders take a look at the property, and they won't fund in that city. So there's a lot of, ins and outs to the industry, like anything, but the property itself, they want to look at the market value of the property. The most important qualifications, I would say, would be that you have some skin in the game. You have 20 to 25% to put down. They typically look for a minimum credit score of like 650 and above is good. We have been able to squeak a couple in that were between 6 and 650, but I would say no lower than 600 as an absolute minimum to get any type of mortgage done like that. And as long as you can show income to basically show that you can afford that payment, whatever it is, if it's amortized over 30 years, as long as you can show affordability, whether it's through your business income or if you're just a personal and you have a job and you're looking to acquire a property, as long as your income can show that you can afford that payment from an affordability standpoint. The down payment and like I said, the down payment and the credit and the affordability are the 3 most qualifying factors.
You just mentioned a refinance deal that you were working on. How does the refinance process work in commercial real estate? Is it like a regular commercial mortgage? Is it similar?
Sorry.
I was just gonna say, is it similar to a regular mortgage, a home
Yeah, it's
mortgage?
very, very similar. Most commercial lenders will go up to the norm, and the standard is that 70 to 75% LTR, loan to is it LTR? LTV, I'm sorry, loan to value. So for example, if you have, we'll just use 500,000 for easy numbers. If you have a $500,000 property that it's worth about 500,000, the max that can be lent on that property would be, let's just say 70% LTV, which would be about 350,000. So if you only owe 100,000 on your mortgage, there's about a 250,000 there left over that you can do a cash out refi on. So LTV is loan to value. So to break that down, using the example that we did, 500,000 is the market value. right? Set using 70% loan to value, which mostly all lenders will go to 70%, would be 350 total outstanding. Now, if you have a mortgage today and it's 350,000 or more, you don't have any cash available to cash out on. So whatever your mortgage is, or if you don't have any mortgage at all, you can get up to 350 minus that whatever you already owe. So it's 70% is the max. 70 to 75% is like the max that you can qualify for, less whatever the current mortgage is.
What type of places would you be looking for this type of financing? Would you just go into the local bank, or what else, where is it available?
Yeah, I mean, it's available at your local bank. Obviously, if you have really strong credit and can get your the financing and the mortgage through the bank, that's one option. As you know, and I know, the banks are extremely challenging and have a lot of barriers and hurdles that you have to jump to get approved. We can also handle that if you do get declined by the bank. Our mortgage lenders are a little bit more aggressive and have less restrictions, and we have a lot of ways to, we find a way to get it done and make it happen if there are some issues with those types of deals.
How do you know what type of mortgage financing that you should be looking for? Business owners don't have a lot of time for this kind of stuff. How do they, how do they, I guess, how do you fish where the fish are?
If I understand your question correctly, are we more thinking about what product is best for if we're looking to, like,
what type of how do you determine what type of mortgage loan product you need?
I guess that starts with understanding what the customer's goals are, right? What are they trying to accomplish, right? If you have a real estate company, you're just looking for some cash flow, to go to your day-to-day expenses, or you're growing and want to put money into marketing, hiring, whatever, in that sense, a line of credit or a regular term loan could be a great viable option. If we're talking about securing a property, typically, because you're talking big money, most customers are looking to acquire a mortgage, right? If they're doing a fix and flip, it could be a 12-month interest only mortgage, and then once they sell, they pay it off, and then it's done that way. Or if they're looking to acquire a property to hold, or acquire a property in your example with an owner occupied, right? Where you're trying to, we have a lot of business owners that come to us that have been renting for years, and now they want to purchase the building because they realize that they can acquire that asset, and they're already spending the money in rent and just paying someone else's mortgage. So one of the best options for many business owners today, I experienced this personally. It was one of the best investments I made prior to me getting into finances. I purchased my first business, the property that I was operating out of, and I kept it for like 20 years, and I built a lot of equity in that. So owner occupied property is a great way to go. You're already paying rent. Chances are when you apply to purchase that, your mortgage is usually lower than what you were paying rent, you'll find out in most cases. So it's a really good opportunity, and the affordability is already there because you're already paying that money to rent. So it's a great opportunity to turn that expense into an actual asset that you can build on monthly and have that over the years, and potentially maybe even for retirement.
I'm a big, huge fan of a line of credit. You kind of mentioned that. Just generally speaking, I think every business needs a line of credit. It's a super flexible way to access borrowed capital. What kind of interest rates and terms and things are going on right now in the
Great
line of
question.
credit world?
So first off, we always recommend our clients try their local bank first, right? Wells Fargo, Bank of America, Santander Bank, whatever bank is local in your state. You have a relationship there. You have your business banking there. Absolutely apply at the bank first. Typically commercial lines of credit through your bank. The lowest I've seen is probably 4 or 5%. More likely, you're probably anywhere from 4% on the low side to about 9 to 10% on the high side, depending on the risk and which bank you use. As we talked about, the banks are extremely challenging. You have to dot every I and cross every T. With credit, everything needs to be totally collateralized. The banks aren't taking much risk in today's world, which is why the alternative lending industry is, so vast and so large and growing with all the fintech and online lenders today. So if you're able to get the bank line of credit, that's great. If you're not, you still have plenty of options available to you. Here at NAV, we have like 3 or 4 different line of credit providers it's one of our very best products that we offer. We fund multiple of them every day, and they're really just different credit tiers, right? If you have really, really strong credit, which we say is anything from 650 and above, and you meet some of the other qualifications with minimum revenues are, roughly about $300,000 annually, about $25,000 a month in total deposits. Our best line of credit product can go out to about 3-year amortization, right? Depending on how well the file scores, you'll typically see offers either 12 months, 18 months, 24 months, and the very best of files can potentially get a 3-year amortization. And what that means, Ty, is if you draw $50,000 on your line, if you were lucky enough to get approved for a 2 or 3-year amortization, you'll have one low payment amortized over 24 or 36 months, which keeps costs, really low as far as your payments are concerned. Interest rates typically start in the low teens. I'd say 11, 12, 13% is the prime line of credit product for us. And then we do have a few others that, depending on credit scores, one is in the mid to upper teens. And then we also have a few line of credit products for clients that, may not be doing so well with their credit, right? They could be coming out of a divorce and their credit got beat up and it's down to 550 or 600. So we do have some options that are higher risk. Of course, those much higher risk clients, the rates are going to be significantly higher as well, right? Or it could be a new business. That's a startup that's been around for 9 months or 12 months, right? Some of our line of credit providers on the higher risk side will consider doing a business with as little as 6 months time in business. So, we like to try to say we almost have a program for just about everyone, and we try to do our best to find a fit for everyone. So there are a lot of options out there.
So if you're in the market for some kind of real estate financing, what advice do you have for folks? What advice can you share?
So like any type of lending, even though it's for business, your personal credit score really weighs in heavy, right? All lenders are going to pull business if you're a business, right? They're going to pull, first thing they're going to do is pull when you fill out an application, they're going to pull business and credit scores, right? Mostly all of the more traditional like products that are the closest to the bank, like our commercial mortgages, our better line of credit. We also have a 5-year term loan program that's out there. They typically start at like 650 on the personal credit side, right? So if you're below 650, none of those products are available to you. And I'm sure if you're looking for financing, you're going to look for the better rates and the better products. So it's so important to to keep that personal score above 650 if you can. One thing that I've noticed from my experience, there are a lot of business owners out there that are using their personal credit cards to fund their business, right? Especially in the early stages before they can get business loans and business lines of credit. The only thing that I want to say to let everybody know is I've seen it in my own personal credit and a lot of customers that your swing in credit score, if you have high utilization on your balances on some of the credit cards, it could swing like 50 to 70 points. I've seen that number of times where it could just be one credit card. If you have one credit card with a $20,000 limit and you're charging up, let's just say $15,000 balance on that, because that utilization went from say 7 to 10% all the way up over 70%, that's a major direct impact of your personal score, and it can really affect it in a negative way. So if your score's not too bad, the first and easiest way, if you have debt on your personal credit cards, is to try to always chip away and keep those balances down and keep your utilization under like 10, 11%. And that's one, piece of advice to keep the personal credit score, because every lender's looking at that right from the gate. And you don't want to not have availability of products just because of a simple score, if that makes sense.
Yes.
So
No, keep going.
So business credit is also very important, right? Most lenders, depending on the product and obviously the better tier and the lower cost products, it's common sense. They want to see that you have some good history, right? You pay your bills. So any type of revolving debt, right? And how long you've had it. If you have paying your cell phone bill, your electric bill, your car payment is good. If you have a copier and that's a monthly payment, anything that's reporting to the bureaus, right? The more years that you have in your history, the better. Just to provide an example that may help, like our 5-year term loan product, very good product. Interest rates are as low as 7.49%, 650 minimum personal credit. they have a minimum of about 2 years time in business, but they say that they want to see at least 5 years of good history on the business credit side, right? So if you're kind of new and starting out and you might have just like one or two trade lines on your credit, there's a good chance they're probably going to decline. So anything that you can do to continuously build up your trade lines. I know NAV does have the business credit reporting where they report to the bureaus that adds a trade line. But anything you could do on your own with your bills, your expenses, just to show that you have a good payment history, and the longer it goes, the better it is.
I got one last question for you to wrap up. The last couple of years have been really weird.
To say the least.
To say the least. Is there money available? I mean, I'm sure there's a lot of guys out there thinking, yeah, I could use a loan, but there's nothing available. Is there money available?
That is a very, very good question. And the quick answer is yes, right? We'll go back into the beginning of COVID in March, I believe 2019, or is it 2020? 2020. As you can appreciate, when business owners have to shut down and have to close their doors and can't let people in, all of the lenders in the network, right, they stop lending because they have the fear, if the business can't open, how could they pay me? More importantly, what happens to these lenders, right? They have, let's just say there's $100 million in their portfolio of loans. Well, if the whole United States of America is mandated that we can't open, we can't go out of our house, we can't work, we can't sell, people can't do their jobs, those lenders go from lender to collection agency overnight. So they're managing, all their debt, trying to keep people going, lower payments, see what they could do, pause payments. So long story short, throughout the whole pandemic, lending was non-existent, right? Most lenders were struggling. Some even went out of business, and it, hurt them just like it's hurting a lot of our restaurants today with all the mandates and restrictions. So coming out of COVID, we then had PPP, which was a great thing for our customers, right? The government stepped in, put out all these loans for, I don't know if it was interest-free or very, very low interest rates, 1%, 2%, or possibly interest-free and forgiven. But that, a lot of business owners, got a lot of help from the PPP. We played a big part of that. I think NAV funded over 15 or 16,000 businesses. So we, like to think that we played a big role in helping a lot of our business owners and a lot of customers that came to NAV looking for PPP financing. All through all of that, as we were slowly coming out of the pandemic, some of the lenders were starting to dip their toes in the water, we like to say, right? They're lending, but everything's tight. They're not giving the approvals that they normally would. They're just, trying to get back into the business. Well, the good news is, as of once PPP was pretty much finished in the midsummer, the last 3 to 4 months, everything is wide open right now. It's a great time to borrow. All the lenders are fighting for market share because it's been so long since they've been lending. All these lenders have their own lines of credits or investment capital that if it's just sitting in their bank account, it's not making them any money. It's not making the investors any money. So it's a great market right now. They're all fighting for market share. And when I say fighting for market share, what does that mean to our business owners? It means that they're going to get better offers. They're going to go out. Like, for example, I said that one line of credit product that we have, the maximum term used to be 18 months. Now they're going out to 3 years. So they're doing anything they can to win business, which includes dropping rates, longer terms, higher credit amounts. So it's a really, really good market. It's probably one of the best I've seen right now. Hopefully it lasts for a while, but definitely a good time to borrow.
Well, that's great news. It's great news for small business and the economy. Thanks a lot, Eddie. I really appreciate being able to talk to you today. I hope this information was valuable to everybody. Please, if you have any questions, reach out to us and we'll answer them via email from here on out. But it's been a real pleasure to visit with everybody today. Thanks, Eddie. Thanks for tuning in, and we'll see you next time.
Thank you, Ty, and thank everyone for joining. Hopefully, like Ty said, you found this helpful. If anyone has any questions, feel free to shoot me an email directly. My email is eddie@nav.com. Happy to help anyone that's interested in financing. And thank you all for joining.
Thanks.
Have a great day.